Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, what I'm about to say is going to sound completely backwards because right now, markets feel unstable, crypto feels uncertain, and XRP, it's not moving the way most people expected. But what if I told you that this exact moment could be one of the most important turning points XRP holders have ever seen? Not despite the uncertainty, but because of it. And once you see the full picture, you won't look at this market the same way again. As always, I want to thank everyone that takes the time to like, subscribe, comment, and share these videos. It really does help this channel out and get this video to people that need to see. And as always, if you're new here, there's a rant at the end of the video that everyone in the Wolfpack has become to love. Let's dissect this. I want to talk about the hidden mechanism. Let's start with something most people never take the time to understand. The mechanism behind price. Because markets don't just move randomly. There's always a chain reaction happening behind the scenes. And right now, that chain looks like this. Energy volatility influences inflation expectations. Inflation expectations influence central banks like the Federal Reserve. Central banks adjust interest rate outlooks. Higher for longer rates tighten liquidity, and tightening liquidity pressures risk assets. Stocks feel it, tech feels it, crypto feels it. And yes, ladies and gentlemen, XRP feels it too. So what you're seeing right now may not be weakness in XRP. It may be a macro liquidity event playing out in real time. I want to talk about the moment that changes everything, because here's the part that should make you pause. While markets are reacting to interest rates and short-term uncertainty, some of the largest financial institutions in the world are continuing to build. Firms like BlackRock have openly discussed the tokenization of assets. Major banks are already testing blockchain-based settlement systems. And regulators are actively working towards clear frameworks for digital assets. So you have this strange situation where the price is reacting to the present, but the system is being built for the future. And those two things don't always move at the same time. Short-term noise, long-term structure. Price reacts, the system evolves. History leaves clues always. Now this next part where things really start to click, because we've seen this exact pattern before. In the early days of the internet, most people didn't understand it. Prices of tech companies were volatile. Sentiment was uncertain. But behind the scenes, infrastructure was improving. Adoption was growing, and institutions were quietly positioning. The same thing happened with electronic trading. Let that sink in. The same thing with mobile technology. Let that sink in. Even early cloud computing. The biggest shifts didn't feel obvious in the moment. They felt confusing. And that confusion is often where the opportunity begins. So regulation is shifting. But here's where things get even more interesting. Because for years, crypto had one major problem: uncertainty, unclear rules, unclear classifications. And that uncertainty kept major capital on the sidelines. But now, that's starting to change. Regulators like the SEC are being forced to define digital assets. Lawmakers are actively discussing frameworks, and globally, there's movement towards structured regulation. It's not perfect, it's not complete, but it's progress. And markets don't need perfection, they need direction. Let's talk about the institutional shift. And this is where things get serious, because institutions don't chase hype, they build systems. Right now, major players across finance are exploring tokenized securities, digital settlement layers, cross-border payment efficiency. Names like JP Morgan, BlackRock, global banking networks are all looking at how blockchain fits into the future of finance, not as a trend, but as infrastructure. And this is where XRP enters the conversation again, because one of the biggest inefficiencies in global finance is liquidity fragmentation. Money is trapped in different systems around the world. Slow, expensive, disconnected. The idea being explored to fix this? What if value could move instantly, across borders, across currencies, with minimal friction? That's where XRP is often discussed as a potential liquidity bridge, Not guaranteed, but increasingly relevant. The disconnect. But here's where it flips completely. There's a massive disconnect right now between what the price is doing, what is being built, what price is reacting to, interest rates, liquidity conditions, market segment. But structure's moving forward regardless. And historically, this disconnect doesn't last forever. When it resolves, it tends to catch people off guard. The liquidity cycle. Now, this part surprised a lot of people because it explains almost everything. Markets are driven by liquidity cycles. When banks tighten, liquidity leaves. Risk assets struggle. When conditions ease, liquidity returns. Risk assets respond. We've seen this cycle after 2008, during 2020 stimulus, across multiple market phases. So the real question isn't just what is XRP doing today? It's where are we in the liquidity cycle? Why today matters, ladies and gentlemen. So why call this the biggest day? Because this may be one of those rare moments where everything begins to align. Macro pressure, temporary. Regulatory pressure, structural. Institutional positioning, strategic. And this is important. This isn't about hype. This is about timing. What's happening right now isn't just another update. This is where macro pressures and structural progress collide in real time. And moments like that tend to matter. So here's the big question. Let me ask you something and really think about it. What if even a small percentage of global financial assets, stocks, bonds, currencies, move on to blockchain infrastructure? What happens to settlement speed, liquidity movement, global efficiency, and more importantly, which systems are positioned to handle that shift? That's the question institutions are exploring right now. Here's the edge most people miss. Here's the truth, and most people won't act on this. The majority will wait. They'll wait for confirmation, headlines, price movement. But by then, the position phase is already over because early stages never feel obvious. Here's the final outlook. Now let's stay grounded. Nothing here is guaranteed, but something is happening behind the scenes. A shift from slow to instant, from fragmented to connected, from manual to automated. And XRP sits right in the middle of that discussion. Not alone, not certain, but absolutely part of the conversation. So maybe the biggest day for XRP holders isn't about price. Maybe it's about recognizing when the system itself begins to change, before it's obvious, before it's mainstream, before everyone else sees it. And the real question is, are we watching the early stages of a financial transformation or just another cycle that feels bigger than it is? Drop your comments below. I read every comment and I love answering them. And if you made it this far, you're already ahead of the curve. Well, ladies and gentlemen, happy Saturday. So much is happening right now. What a time to be alive. Honestly, it's truly amazing. If you're new here, I want to welcome you. Subscribe and like. And if you want to keep up with everything that we talk about, please go back to the previous videos because the rants build on each other. So the biggest thing that we're looking at right now, I'm looking at how long it's going to take the USS Boxer Amphibious Ready Group and the 11th Marine Expeditionary Unit that left San Diego to get to their area of operation. That's going to bring the entire force over there to above 9,000 of Marines. That's big. The markets right now, like we've been saying, are in a state of flux. I always go over this again. I go over this because this is what we pay attention to. And as a financial mercenary, again, we care that the world is a better place, but we're going to prosper from all the chaos that's created from the top down. Just like the remora, we swim underneath the apex predator, and we feast on the people getting cut up like sushi. If you're here, you'll learn not to get cut up like sushi. And ladies and gentlemen, as always, you got to have that Gucci clarity. You got to have that Gucci conviction. You got to get that frosty mindset. You got to understand right now that people that FOMO'd on different ranges and different assets got completely annihilated and cut up like sushi and taken out in body bags. I remember on the floor of the Mercantile Exchange, the first time it happened to me, I learned such a lesson. And I'm going to be making some content and video in the Patreon for that. Ladies and gentlemen, I want you to realize one good tip from the pits can easily pay for your entire year subscription. If you want a deeper macro research and learn how to take advantage of everything we're talking about, come and join over 400 members in the Patreon, the Crypto Republic Desk Monthly. And I want to welcome all the new members of that and all the new members of the membership channels. We're going to get some videos out for that today. But take advantage of the chaos that's going on right now, because It's easy to prosper in markets that are turbulent because it plays by a different set of rules. It plays by geopolitical chaos, and that chaos causes something. And we're going to go over in this video the LNG chaos. We're going to go over everything that and updates of what we're following, and it's really, really important. Again, so I want you to understand what I was on the phone with a very, very large family office in Asia that I've worked for a very, very long time. One of my first customers. And like I always said, they love my lines and they're fans of the channel. They can't believe I actually give this stuff away for free. But there's nothing better than giving things back, because I always say you make a living by what you make, but a life by what you give to others. You have to give things back. This is what I'm paying attention to right now, besides the amphibious group getting there and everything building on everything that we've said. So stick with me, and I'm going to tie this all into XRP again, as always, and the rest of the cryptos, because everyone is bottom feeding right now on that. And it's the transfer and allocation of money and squaring off of time zones that's very important. So if you look at this and stay with me, the dollar is getting squeezed right now as far as we're concerned. You got BRICS countries are selling. They're selling gold right now, okay? BRICS countries are selling the dollar at margin and they're selling gold at the same time. So the dollar is stronger. So U.S. and Americans are seeing gold as well. So gold is actually acting as a risk asset because there's a lot more fluff in it than most people realized. Again, rewind that. So people are selling out of gold. We told you that we thought that one of the $500 way moves would be down and lower. We said that in a previous video. Again, we watch where things go because these trades were crowded. So there's more fluff coming out, right? So if you look at what's happening right now, that's a big thing. You saw some of the metals correct massively, very, very fast. And these are massive moves. People got annihilated. They got totally cut up. CTAs got annihilated. But the one thing that a lot of people have that are professionals, they have discipline. They have that Gucci discipline, that Gucci clarity to stay there. That's why when I say that the phrase, we're going up this frosty mountain, drinking a frosty beverage, is to have discipline. Trade size, small, discipline. Oil is moving everything right now, okay? Oil is just where the market is taking its cue from. As oil goes higher, the market's selling off because of risk off. Again, and you know, in a previous video, we were going over LNG. The damage done to Qatar's LNG is pretty substantial. Again, you know, why the news isn't talking about it, I don't know. But what traders are paying attention to, and CTAs are paying attention to, and funds and sovereign offices and people like us, anyone retains any capacity, we told you in a previous video, and we put it out also in the Crypto Desk Monthly, about LNG plays that are going to take advantage of what happens if structure gets whacked. Structure got whacked. It's going to take 5 years to fix what they're saying right now, and that's their expectations, okay? But it's storage facilities that matter the most in that region, and it's affected directly because of what's going on in LNG. To fix these LNG terminals takes a long time. It's really, really going to take a long time. So no one's discounting this problem yet, even though everyone's aware of it. So the market itself is not discounting how long it's going to take to fix this, how much they lost. Ladies and gentlemen, losing that amount, that percentage that we went over and we just said right now, is so big that to fix for 5 years and to not be online, it's crazy. And in the summer months coming in the United States, that means we switch to summer gas, okay? Summer gas is seasonality. Summer gas is opposed to winter gas, right? But summer gas is normally cheaper, but it's going to probably be more expensive because a lot of the LNG and LG is going to be sent from the U.S. to Europe. Europe is going to have a big problem with this because Europe they got no energy. They're dependent on things, so they're going to get hit really bad. So you could sit there and say this, and as far as I'm concerned, looking at what's happening, and that's why the prices are being priced into it. Like we said in a previous video, downstream, how long is it going to take to rebuild the infrastructure? You're talking 5 years. 5 years. That's massive. Again, so you're going to see higher prices for RBOB. We're seeing that already on the NYMEX in the CME. We're seeing it already. So to me, it's unbelievable what's happening. And you're basically seeing a situation where commodity plays are regional, which is what you're seeing. So regionally, it's a good thing, but for globally, it's becoming a bad thing as far as I'm concerned. So when you look at this, that's what geographically pricing becomes at. So at a global, the worst case scenario, you got to see some bad things are becoming globally good things, becoming regionally good things. It's crazy, you know. So what that really means in English now is, where do you get the capacity to fix that's gone offline? Drop in the comments. I want to know. Honestly, that is when we went over the whole videos. We went over whole videos on this, whole rants that if the structures got hit and they got whacked. They got whacked. How do you fix that? time. The Golden Passage in the States, that's just going online. But again, everything downstream now is going to basically get hurt. We talked to you about sulfur. We talk about what's going on in the nickel futures and nickel mining in Indonesia. They need sulfur for refinery capacities. If they don't have sulfuric acid, you can't leach. Copper processing in Northern Africa in certain places, they need it as well. There's going to be a crunch on that. So you're going to see prices sustain. So now the fluff comes out of the metals market. And I don't believe in any kind of wartime premium or anything like that. I follow the flows. We've been saying this long before anybody else was talking about this. And it's not a popularity contest. It's only a contest of, does your bank account grow from this? That's all that matters. That's all that matters. Being a financial mercenary, we find the easiest places. The easiest places for arbitrages, the easiest places to track money flowing from ABC, and we take advantage. So you can see what's happening right now, and it's being priced in. So the world's going to play the oil market. Do I think that gold's going to go and silver can go down much lower? Potentially a little bit, but when things normally are this oversold, it tends to put in short-term bottoms. But I'm not giving any recommendations out here. None of this is financial advice. We're paying attention to the time it takes to get to the Middle East. The Marines were watching. We're watching the news, what's going on. It's very hard to put your thumb on anything. Yes, we're in the camp that we think the Clarity Act gets passed, but again, that's taking back seat to the overall energy markets. Energy is dominant. I want you to think about whatever happens to the energy drops down to the metals and drops down to gold, silver, further going down into the equities. People are still overweight in equities. I don't know. Well, what we like very much is we like consumables. We like commodities that you can eat. That's going to be on a tear. That's something that we're paying attention to. But again, ladies and gentlemen, if you have your recce, you have your plan, you know what you're doing and why. The things, if you write down just what we say here, the stuff we give away for free is unbelievable. It's life-changing. Again, and I want to welcome everyone to the Crypto Desk Monthly who signed up. You have entered it into a new realm of understanding of how to take advantage of the markets. No longer will you be beholden to this psycho whipsaws up and down, up and down. You'll be able to capitalize it. You'll be able to set sail and harness the wind. And if you want to see how to do this, come and join us. Like I told you, one good tip from the pits can easily pay for your entire subscription. Join over 400 plus people growing with that. But I want to give this to you straight right now. What you're seeing in the markets doesn't make sense. And if you feel like something is off, like prices are moving in ways that don't match reality, you're not crazy. You're not crazy, because we're in one of the most mispriced, confused, and dangerous market environments in years. On one side, you've got escalating geopolitical tension, oil up 60 to 70% year to date, credit markets quietly weakening on the other side. Investors are pouring tens of billions into equities. In just one recent week alone, over 60 billion flowed into stocks, nearly 50 billion of that into U.S. equities specifically. That's the disconnect. It's crazy right here. The gap between reality and pricing. That's where the opportunity is, but it's also where the risk is. I want to talk about regime shift. To understand what's really happening, you need to understand this. We're no longer in the same market regime that defined the last decade. Write that down. Massive. The old world was built on low inflation, globalization, cheap liquidity, central bank stops. Ladies and gentlemen, that world is gone in a galaxy far, far away. A galaxy CC far, far away. It's gone. It's gone. Now look at the numbers. Government spending has exploded to levels historically only seen in crisis periods over 40 to 50% of GDP. In major economies, debt levels are structurally higher. Supply chains are being reshored. Capital is being redirected toward defense, infrastructure, and energy security. We are shifting from a deflationary system to a structural inflationary system. Write that down. Let that sink in. And in the kind of the environment, the winners change. Commodities, energy, real assets begin to outperform. And we're already seeing that. Oil is one of the top performing assets of 2026. Commodities broadly are up double digits. This is not random. This is regime change. This is the behavior that doesn't make sense as far as we're concerned, okay? This doesn't make any sense at all, right? Again. Now here's where things start to break. Because if you look at where the money is actually flowing, we always follow the money. I've been stressing that, and I teach everyone, follow the money. It doesn't match the environment in the past few weeks. Billions have flowed out of gold. At the same time, equities are seeing record inflows. And tech alone has already attracted over $25 billion year to date. Think about that. We're in a world of rising geopolitical chaos and risk. Energy volatility, inflation pressure, lions and tigers don't bear. And instead of moving defensively, investors are doubling down on risk. At the same time, cash is also rising, over 20 plus billion flowing into cash vehicles. That tells you something critical. That's not conviction, ladies and gentlemen. That's confusion at the highest levels. And contradictions in markets don't last. They resolve violently. Okay, so when we talk about the late cycle trap, here's where most people don't understand. Here is exactly what late cycle behavior looks like. Investors still buying dips, equity allocation still elevated, positioning still crowded. Even now, equity allocations remain above 60% in many large portfolios, but under the surface, the structure is weakening. You've got high yield bonds seeing multi-billion-dollar outflows, credit spreads starting to widen, market breadth deteriorating. And here's the key signal. Risky assets like Bitcoin are down nearly 20% year to date. That's not a healthy market. That's a market where liquidity is tightening. But here's the dangerous part. We have not yet seen panic. Cash levels are still relatively low. Investors are still buying dips. Flows are still positive. And markets don't bottom until that changes, okay? So we think energy is the time bomb. That's what we think. Let's talk about the one thing that matters most right now, energy, because this is the variable that resets everything. Right now, oil is up roughly 65 to 75% year to date. Congratulations, everyone who took the tips from the pits on that transaction. You paid for 2 years of your subscription. Energy is the number one performing sector globally, historically. Every major spike in oil prices has preceded economic slowdowns or recessions. Every single time. Let that sink in. Why? Because energy is a tax on the system. So when oil rises, transportation costs rise, production costs rise, consumer spending gets squeezed. And here's the problem. Markets are still pricing in strong growth. In fact, expectations are still calling for double-digit global earnings growth. But you can't have surging energy costs, tight financial conditions, weakening credit, and still get strong growth. That's not how the system works. That's impossible. You can't have that. You listen to what I just said? You can't have any of that. You can't. So the concentration risk. Now let's go deeper, because the structure of this market is another major problem. A huge portion of performance is being driven by a small group of stocks. Today, the largest tech and AI-related companies make up an extreme percentage of total market capitalization. We've seen this before in the 1970s with the Nifty 50, in the late 1980s with Japan, in 2000 with the dot-com bubble. And historically, these concentration levels tend to peak right before major corrections. There's even historical precedent where a single sector dominated over 70% of the market before collapse. The risk is simple, guys. If growth expectations don't match reality, this concentration unwinds. So the most important part, what smart money is doing, none of this is financial advice. Here's where it gets interesting and spicy, because while most people are chasing momentum, there's a subtle shift happening under the surface. You're seeing increased allocation to inflation-protected assets like tips, rotation to healthcare and consumer sectors, reduced exposure to cyclicals and metals. At the same time, government bonds are seeing consistent inflows over $10 billion in recent weeks, and riskier credit facing steady outflows. This isn't panic, this isn't repositioning, and it's happening quiet. So this is how this plays out. So what happens next? Markets move in phases. Right now, we're in the transition phase before a true bottom forms. A few things need to happen. Overcrowded trades need to unwind. Leaders need to correct. Energy prices need to stabilize. Because historically, when oil spikes exponentially, it doesn't end cleanly. It ends with stress. And here's the key idea. Markets don't stabilize when everything is fine. They stabilize when something breaks and forces a response, unfortunately. So if you're looking at this market and thinking this doesn't add up, you're 100% correct. You're right. It doesn't. But that's exactly where the edge is. Not following the narrative, but an understanding where reality and price diverge. Because when that gap closes, it doesn't happen slowly. It happens all at once, ladies and gentlemen. So if you want to understand how we're going to take advantage of this and you're tired of being left behind, do come and join us at the Crypto Desk monthly. You're going to learn a lot and be able to take advantage of this. And one Tips from the Pits pays for your entire year subscription and join over 400 plus community of traders growing. What that means in English, taking the PhD out of PhD, chaos is driving the markets. Chaos is blowing the wind. Chaos is the Captain Ahab right now. It's 100% what that is. Again, you got people cutting up like sushi because they're FOMOing and they're going at different points in the range. Again, the market's being driven by news. The news is being driven by tweets, which I think is nuts. The tweets are being driven by other schedules that people have to make in time to hopefully make sure that they get reelected, hopefully make sure that they beat summer pricing. There's so many moving pieces. It's unbelievable here right now. But the one thing that we do know that we take to the bank, we take this to the bank. We know that the LNG risk is real, and it's going to take 5 years to fix that. There's going to be shortages felt. So when I'm looking at long-term and short-term structural and momentum reset in metals, to me, what I'm looking at is I'm looking at the volatility, and I'm looking at it as an acceleration rather than a structural failure. So to me, there's a lot of congestion going on right now in gold. Again, so gold and silver both recorded extended sequences of higher monthly closes prior to the current interruption. Gold posted 10 consecutive higher monthly closes before signaling a potential down month. That's so huge. While silver followed with a similar run through early 2026, this establishes the primary condition, the trends intact, the momentum stretched, and consolidation emerging after a period of directional persistence. That's huge. Again, we don't believe in a war premium. We just follow money moving from point A to point B, where CTAs have to make their returns, and they're going to follow the path of least resistance. Again, so we believe printed to win it's going to begin. That's coming as far as I'm concerned. And why we believe that's coming is because that is the situational awareness that we're taking, and that is the most important reason and theme. That is a big catalyst that we believe is coming, and people are going to enjoy that. So if you look at positioning, is very crowded with a lot of things, and that's what happens. So when trades get crowded, people get nervous. So when you watch where money's flowing. It's like we said before, money's moving into equities and treasuries. It's exiting gold, high yield and materials, indicating repossessioning rather than a true washout. So you have macro regime shifting to commodities and inflation, ladies and gentlemen. So if you look at the 2020s are defined by geopolitics, fiscal excess, and supply constraints favoring oil, metals, and gold over traditional financial assets. Again, we believe oil is the key trigger for markets. Sustained high oil prices increase recession risk. Stabilization likely requires oil falling below $100 and policy easing or de-escalation. Qatar LNG disruption is materially and long-lasting. Damage to key trains removes 17% of capacity, with repairs likely taking 3 to 5 years. Let this sink in, forcing a structural lower output profile. So if you look at the near-term supply losses are large and escalating. JP Morgan escalates 36 BCMs of lost supply this summer, with additional month losses if disruptions persist. Tightening global LNG balances are rough. Expansion narrative now uncertain. Security risk delays and cautious strategy from Qatar undermine prior expectation of rapid capacity growth challenge. The oversupplied LNG thesis. Markets underpricing long-term risk. Look at the European gas curves, my lord. TTF have not fully adjusted supply disruption and geopolitical escalation, implying further upside in the long-dated prices. Ladies and gentlemen, you know what that means? You know what that means? Probably not. But that's okay, because you're here to learn. That means prices will move higher, in our opinion, because when they price in the damage, it's going to go off. And force majeure being declared on long-term contracts is so big. So again, if you want to see how we're going to capitalize on this, I keep saying this, come and join us in the Crypto Desk Monthly in our Patreon. You'll learn a lot. You really, really will, and you'll thank yourself. Ladies and gentlemen, that's going to move everything right now. It just is. It's going to influence everything else. I'm almost to the part about crypto. Stay with me. Stay with me. China's structurally advantaged in the AI and energy race. I told you that the AI is a kilowatt race. I've been telling you that. You don't have to go back. Again, cheap electricity, scaling power capacity, and token exports, AI, give China a cost infrastructure edge over the U.S. China uses coal for energy. They don't care about green energy for their own country. Geopolitics is reinforcing Asia's position, not weakening it. Energy flows through Hormuz remain Asia-centric, insulating China while exposing Western economies to greater disruption risk. So domestically, China's cycle is stabilizing with upside optionality. Property appears to be bottoming, consumer confidence is recovering, and excess saving could drive a pickup in consumption. Investment implications lean into China and Hong Kong. Tech, property, and market infrastructure are favored, while Asian economies remain vulnerable to energy shocks and tightening policy. So if you look at war plus oil shock equal inflation spike before growth slows down. Markets face a dual shock with higher energy prices, tightened financial conditions to accelerate a late cycle slowdown into a credit event. So if you look at credit cycles, they're turning negative, unfortunately. Rising credit, tighter liquidity, and widening spreads point toward increasing default risk and stress across lower quality borrowers. So if you look at volatility, the regime shifting higher. Again, so expect larger and faster market moves across assets. Be prepared for this as liquidity deteriorates and macro uncertainty rises. So our preferred positioning, Again, not financial advice, just our opinion and retainers. It's defensive and real assets. Favoring commodities, energy, cash, quality bonds over risk assets. Tactically buying over deep drawdowns. We like crypto because it's on sale. We look at crypto as a commodity. We always did. We like cold storage wallet. Not your keys, not your crypto. Again, we like to pay attention to something that's quiet. That's what we do. We don't follow groupthink. China's doubling down on state-led tech dominance. Their 5-year plan prioritizes massive investment in AI, semiconductors, energy system, and infrastructure, positioning China for long-term industrial and technological leadership. So global impact you're asking equals China gains, developed market losses. The China tech shock is expected to pressure developed market profits and growth while increasing China's geopolitical. So they're going for it. They really want to increase their economic influence. The domestic demand rising, but slowly and unevenly. Consumption's a stated priority in China, but policy execution is gradual. Equities are being used as a key channel to drive household wealth and spending. Here's the investment playbook. Back China winners, policy-favored sectors, and equity markets are centered, with potential RMB strength and continued global deflation from China's export machine. So if you look at all this, and I'll drill down, the macro backdrop deteriorating, inflation plus geopolitics driving commodities. Iran-related tension are pushing energy higher, feeding inflation expectations, tightening financial conditions across markets. Gold's under pressure from rates and dollar strength. Rising yields and a stronger USD are driving a sustained pullback, with positioning and ETF outflows reinforcing downside momentum. Energy remains the dominant transmission channel, ladies and gentlemen. Higher gas and oil prices are feeding through to power markets, with Europe holding up for now, but still exposed to further price shocks, unfortunately. Positioning signals mixed and unstable. Futures and swap dealers data showing uneven exposure across commodities, suggesting fragile market structure and elevated volatility ahead. As always, ladies and gentlemen, this content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Always. Ladies and gentlemen, you got a bunch of other companies with XRP filing to go public. Evernorth strategy, that's going to be very, very big. So when you look at what's happening with XRP behind the scenes, what we like, I've told you before, seeing it from the institutional side, that you could be used as collateral to settle trades and a lot of other things. Looking at this, how I look at this and our organization looks at this, and a couple other organizations that we're in touch with as well, that we've been looking at this for a very long time and how to use it, because speed of hand. If I have a very, very different look at this. My Gucci conviction and Gucci clarity is this. I don't care what's going on outside. That's why when you're here and you're listening to these videos, you can tell people what the news is going to be in 24 to 48 hours. It gives you that little bit of edge because we're paying attention to everything in every time zone. Again, it's not science. It's just something I've honed my entire life working with this, and a structure and a discipline that I repeat over and over again that works. So all the things that we just spoke about went over, that it gives us the ability to play multiple tables. As I say, we've set the table for ourselves and anyone that contains us any capacity to take advantage of all the courses that are going to be served for us to eat and consume the alpha. Again, so it's more important to understand what's going to influence the news as opposed to what the news is. We need to be ex ante the news. Again, right? Crowded trades. Ladies and gentlemen, XRP is the future. People are going to argue it's going down. I love the comments. I love everybody, even my haters. We make a video, XRP goes down. Yes, and what's your point? Help me understand why you upset that XRP goes down. You're in it for the long run. Or unless you got into it for a quicker time frame. And if you're in a quicker time frame, I'm sorry, I feel for you. I understand that the pain the train could be causing. But that's why your trade size has to be small. If your trade size is small enough, you can cut it, you can carry it, you can add to it. You don't get stopped out. It's how much time you're in the market, not how much you have in the market. It's very, very important. See, speculating is an occupation. It's a vocation. Okay. You have to do this every day. The new person thinks, oh my God, the newbie, the novice, the more I risk, the faster I get rich. You get cut up like sushi. You will not be Gucci. You will not have the Gucci clarity. You will be cut up like sushi and we will feast on you as the remora. Again, the law of the market must be respected. And if you respect it and you do this every day, you see how this is done. It's not that distressing. Again, ladies and gentlemen, enjoy your Saturday. And if you want to learn more, come and join us at the Crypto Desk monthly. I'll see you there. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves that it'll never happen again, or you can be the one who saw behind the curtain, the one who understood the instructor's shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise. Well, XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. Just open your eyes, smash that like button, ring that bell, leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. Enjoy your Saturday.